Hey guys, welcome to Orukka, Monesave. Let's talk about the difference between CBDCs and crypto, specifically USDCs. Okay, there's a lot of talk around what's different between central bank digital currency versus USDCs, USDT, stablecoins. Which is safer? Is one going to replace the other? Right? Got some questions here I'm going to go through, right? And we'll just talk through it, and I'll explain at least from someone who is non-partial. Okay, I'm non-partial in the sense that we've got our own app. So we've got a fintech app called Monesave. Monesave allows you tap to pay with your Orukka ring, right? So these are payment rings. You can tap to pay with your ring. You don't need your wallet. You don't even need your phone again, because you can just walk around with these things. There's no battery. There's nothing. There's no need to actually have your phone around. You can just go away with this. Just if you're going for a run, going to the concert, going anywhere, traveling, if you're worried about your phone getting stolen or your battery dying, you could just start to pay with these things, right? So it's cool. We launched last year, fairly new, and we're working with quite a lot of banks, working with government, and working with stablecoin providers. So working with everyone here, right, just to change the future of how we pay, right? We're fairly new, right? I'm going to have a whole talk around this one, and I keep doing this, right, just to educate everyone my own way. I'm going to have the time, right? So I'm at work now. But I think the main point I was going to talk about really, again, before I get back to work, for my customers, I live and breathe for my customers. It's just to explain this because I've seen a lot of questions around this. Okay, so what's the difference between a CBDC and a stablecoin? Okay, I'm from someone who's working in this, right? So one, we're not selling you stablecoins. So I'm not going to say which is better. We're not selling CBDCs as well. Again, they're fairly new, but we have nothing to gain here. So we're just impartial here, and I'm telling you the difference between each. I'm not picking sides as well, because again, our side is a customer. Whoever is wearing this ring is my customer. That's the side I'm on. I'm not on the side of fiat or crypto. No. Okay. So the question is, what's CBDC? Okay, so CBDC is basically a central bank digital currency. Okay, it's issued by a central bank, and it's digital because it's. Sorry, I just got a notification from a customer there again. So after this video, I'm going to drop off. But yeah, so it's a central bank digital currency. It's issued by the central bank. What else is issued by a central bank? Money. So the money you're spending right now, cash, no matter what currency, what country you're in, is issued by a central bank. In the US, it's called the Fed. In the UK, Bank of England. In Europe, it's called the ECB. So there are various names for it, but in truth, if you strip away the technicalities and jargons, at the end of the day, you have the government and you have an independent authority that is effectively a central bank. They monitor the policy, they monitor the inflation, they monitor the circulation of the currency. So when you have an issue called, or a new crypto type called CBDC that is issued by a central bank, you can tell from the name it's just a digital currency, a digital form of your currency. If you've got, if you use a dollar today, okay, and you have a CBDC tomorrow, the CBDC is the digital form of the dollar. So what that means then is effectively you can't have your dollar in paper form because it's CBDC. So it now becomes crypto on the blockchain, okay? But I'm sure you're thinking this as well. So does it mean it's now on the blockchain, so it's public? No, because it's still private. It's a private ledger. It's issued by a central bank, but in truth, it's still controlled as they would control your currency. So when people panic and go, oh my God, they're going to control our money. Yeah, they control your money anyway. Central bank already controls the money. The central bank will wake up tomorrow and say that the dollar is worthless. They can do that, right? They can turn around. In fact, Trump, we all know Trump was angry with the chair of the Fed, Powell. How he was angry and asking him to slash inflation rates, pushing him to do things, right? But he didn't, okay? For a while, obviously he's out now and they're bringing someone else in. But the new person might decide not to go with Trump, right? So those are the politics behind the CBDC and the central government, okay? They decide the currency and they put it on the blockchain. They put it on the blockchain. But it doesn't mean that now it's now public. It doesn't mean you should panic as well. What that means is the fact that you can now settle quicker. It's on the blockchain, so it's a lot easier to issue. Okay, maybe as well, they don't have to rely on the banks anymore, because right now when they issue you cash, you can't go to the central bank directly to withdraw money. So you have to go through a bank, and the bank charges you a bit more as well. So what that means is in the future, you might go directly to the central bank. So it helps consumers to go with CBDC. Not as crazy as Bitcoin. That's the problem. So people try and compare it to stable coins. And let's talk about that, so clearly what's stable coin? That's the next question. Well, a stable coin is issued by a private company. So in this case, a private company like Circle can come around and say, hey, I want to issue USDCs. They've done it, okay? And what they've done is they've effectively said, here's a USDC which is issued on the blockchain, and it's going to be 1-to-1 against the dollar. So they issue you a blockchain currency or token called CBDC. And then when you're ready, when you want your money, you can convert it back to the dollar. They guarantee you that. They're a private institution, but they guarantee you that. And how do they do it? Because they've got audits, right? So then you have audits that go through these things, make sure it's there. Here's the point. Are they better than CBDCs? Yes, because they're not controlled by the government. Or in truth, they're not really controlled by the government, but they still have to go through KYC. They still have to be regulated. They still have to, okay, maybe not regulated as much as the fintech, but look what's happening in Europe. Europe can turn around and say, you know what, you can't issue this anymore to European citizens, right? And there's nothing you can do. Okay, so here's the point, right? So guys, it's good to understand the difference. So the only difference between CBDCs and stablecoins is that one is issued by the government, the other is issued by private companies. But in truth, they're the same. The CBDC will tell you you've got one CBDC or digital dollar against the dollar, 1-to-1. There's no change there. The only difference is that one is Bitcoin and the blockchain and the other is not. The same thing as with digital USDCs. USDCs is 1-to-1 against the dollar. And guess what? They guarantee you as well that you're going to get the dollar. Now, how do private companies make their money? Because they then issue and make sure that whatever cash they issue, right, that the cash is invested either in treasuries, in bonds, or somewhere that they make money back. That's how they all make their money, because they get some more returns from the treasury. They make about 5-6%, and then they pay you nothing. Unless you lock your USDC. That's why you say things like yield staking, farming, and things like that, where they try and ask you to lock your yield. If you lock your USDC and say, okay, I've got 5,000 USDC and I'm not going to touch it for 1 month. What they can do is that they can go in and instead of putting it in an overnight treasury, they can put it on a longer term product. And if they do that, you get some cash back, some return, which is more than someone who wants to withdraw their money tomorrow. So that's the difference. Let's talk about the primary goal. So that's true. So what's the point, right? What's the point of CBDC? Well, the point of CBDC is that, number one, I talked about it at the start, right? It's more on the blockchain, so you can issue it quicker, it settles quicker. Okay, so even when the banks are closed, it will settle quicker. So it's just a modernization of your normal currency. So if you have pieces of paper today, the bank doesn't know how much is in circulation, right? All they know is they've issued it. Okay, you went to an ATM, you withdrew it, they track you there. So for anyone thinking cash is king and no one knows where it is, no, they know. Because when you go to an ATM to withdraw cash, they know exactly what's in there. Each ATM has a camera and they see what you have in there. If you take it out of the country, you have to declare it. So they already know, they have a vague idea of what's in circulation. But what the CBDC does, then it allows them to have exactly how much they know is in circulation. They know what the inflation rate is. They can track it positively. The question now becomes, can they do something malicious with it? There's a whole talk about AI and what, the Pentagon are doing to monitor US citizens. That's something for another day. That's something the US guys need to talk to their government about, right? If the government is using currencies to monitor people, then that's something different, and that's something that shouldn't be encouraged. But here's the point, they can do it for anything. They can do it when you go to cash, when you go to withdraw cash, when you go to buy gold and sell gold, they can do all that. They can track you anyway, right? And the idea is, why do they track it? There's always a reason behind it. So they want to track it because, well, number one, it's good. Number two, they make sure you're safe. They make sure there's no terrorist financing going on. Things that, like, again, we know there's war everywhere, right? So we don't know which enemy is coming in to attack a country, right? So that's where the governments come in, and then hopefully they are useful to protect their citizens. So what's the current status? So the current status is USDCs. Let me start with the simple ones, right? So USDCs, USDTs, stable coins are already live. In fact, they're one of I think they were talking about 23 trillion in circulation. So people who want to get into crypto, right? If you're very nervous about getting into crypto, what people do is they just go into stable coins, right? Which is a good way of getting in, because you get your dollar back. As long as there's audit, as long as, again, these are private companies. So I'm not going to say, hey, you will get it back. Be careful, when you invest money. Be careful when you put money in there, because, again, it's not regulated per se as your other investments. So there is a risk there. But in general, rather than going to Bitcoin or going to Ethereum or going to this generic, crypto, if you go into stablecoin, there is that guarantee that you get that coin back, your cash back 1-to-1. CBDCs, on the other hand, are fairly new. They're behind, in the sense that we're still trying to work with, actually, believe it or not, we're working with governments. I know specifically 4 governments we're working with, I can't say. And we're working with a strong Bitcoin provider. Again, I can't say these. These are 5 companies we're working with that want to make these things cheaper. So that would mean that you could go in the future, very soon, go in and actually pay with your ring with Bitcoin, or you can pay with your ring with a digital currency, which is crazy to think about, right? But that's what's going to happen. And I've always said this as well, like as a customer, you shouldn't care how you pay. So when you go in and tap to pay, you don't say, is it Visa or is it MasterCard? Does Visa or MasterCard work, right? So we know yourself that you just go in, you can tap to pay, and we get the cheapest route for you. So that's what's going to happen in the future with CBDCs, with crypto, USDC. The future will be simply just tapping to pay, and we would find the cheapest route for you. So USDC, Cash, MasterCard, Strike, Binance, Coinbase, whichever. We'll look at where you are and look for the cheapest route for you. So that's the future. That's what we're looking at. Again, we're a small company, so we really, really rely on these big companies to help us push these things out. So we're working with them a lot. And it's crazy to think about. Again, we just launched last year, this, just a small company that we're doing this. So it's crazy to think about, but we're excited about that. And there's a question here about, this will be the last question, sorry, and I'll get back to work for my customers. But there's a question around, okay, which is safer, right? So here's the point which I'll talk about, right? So stablecoins, I've talked about it again. It's good because it's been proven, right? So it's been around for about 2 to 3, for about 5 years now. They've been flying through the shelves. USDT, USDC are doing so well. In fact, they're one of the highest holders of US dollar treasuries. That's how well they're doing. So in terms of issuance, in terms of the network, the global scale, they're huge. If you go into developing markets, Africa, Nigeria, South Africa, all these countries, they're using a lot of stable coins because it's the closest thing to the dollar, right? And it's close to the dollars, more so that they're actually invested in the dollar. So you're getting an exposure to the dollar. So if you are going to buy dollars and your government doesn't allow you to buy dollars, people are running into USDC. So it's safer because it's proven. The downside with that is that, there is counterparty risk there in the sense that you're exposed to a private company. Yeah, so that's something to watch out for, which you're not doing on the USDCs, on the CBDCs. So CBDCs, you're not exposed to a private company. You are exposed to the government. The government are the ones issuing it. The treasury, the central bank is issuing this. So you're only exposed to the entire country. So the entire country has the default for your CBDCs to be worthless, which is hardly going to be the case, right? So that's important. The downside, I think, with CBDCs that we've noticed, right, is the fact that it's issued by the government. So there is that fear of monitoring, there's fear of surveillance, there's fear of the banks losing their power. Because if you can go directly to the central bank, you don't need the banks anymore. It's cheaper for you. So the banks lose power there. So that's a concern. And there's a concern that again, I don't share that concern, that the money could be cancelled tomorrow, right? Which is true. But my concern, if you're worried about that, then be worried about even your cash, because your cash can also be cancelled tomorrow. It's printed by the same people. So the same person printing your cash is also going to issue your digital currency. If you're worried about digital currency being cancelled, then be worried about your cash being cancelled, right? Everyone knows what happened in a few countries where they turned around and just canceled the currency the next day and printed new cash. What can you do? So that's it. Then I hope that explains it, right? If you have any questions, let me know. And if you haven't ordered it already, go to orukka.com, www.orukka.com, ORUKKA. And there's orukka-p2p.com. Orukka P2P is the transfers, where you talk with AI and we transfer it from voice to text. It's very, very interesting. Watch this space and keep it up, guys. Join the fold. Take care.